Welcome once again, everyone. So I am DamzyFx, as you all know. Don't forget to subscribe to this YouTube channel. Drop your comment if you get value from this video, and turn on the notification bell so as not to miss out any videos here. What we are going to talk about today is how to backtest on your mobile phone. As you can see, this is my mobile phone. So not using a system or laptop, or even not having a system or laptop, shouldn't be a barrier to your trading success or to your trading analysis, your trading profit. Anyhow you feel you can like hold it. So that's the topic from trading. Here is how to go about the stuff that I made mention on, how to backtest on your mobile phone. Please don't skip any aspect of this video, because once you start skipping any phase of this video, you are like, you might lose some genuine information that you have skipped. So let's go. I want you to know that it might be of two ways. See, there is a line here, that these are lines here, and this is the M30 time frame, like 30 minutes time frame. So you can see this tiny, this like dotted line. It's not a dotted line, but let me just use it that way. This line, see, it group. You can remove it. I remove it like this. I'm coming. You can do it like this. Come to that settings and show period separators, like this box here. This box here that is marked, you unmark it. That's if you want a plain chart like this. So after unmarking it, but there's still that some people might be feeling like, how do I change my candlestick colors? So your candlestick colors doesn't guarantee your profit. That's another thing. Even if you like design your chart, that still doesn't mean you make a better profit. But sometimes there is some candlestick that you will be used to, that at least you can see some things clearly. You might see some people using yellow on black, red on blue, something like that. So if you want this candlestick color, you do. Even some people use white. You just make sure you know the one you use for the bullish candles and the colors used for the bearish candles. So let's get into the settings of the candlestick. So once again, you come here. No, not still that. You see this setting icon here. So you click it. That's why I do get my all these settings I've been using. So you click it. After clicking it, you see let's leave the candlestick line type. Let's still leave that one. Let's scroll down a bit. You can see this very thing here, colors, like your color scheme. So that's where you're gonna click. So after clicking that, you can see but these are just this. If you apply the same settings here, all this color, if you apply it to your chart, will just be like mine. In case you want your chart to be like mine, you can see. So that's not what we'll be talking about today. That will be in another video entirely. I'm just showing you how I locate my own settings, in case you want your candlestick to be like mine, your candlestick settings. In case you just wish, like, you want to try out this very thing. So let's get into the real thing we are here to do today. And there's another thing. You can see my own this very thing is just like plain. It doesn't even have lines. It doesn't have those charts lines. There's a way I still remove it. Let me quickly show you this. I come here, ask price line. I would have used the last price line as well. See, it's of two. We have the ask price line and we have the last price line. I would have used the last price line, but I've changed the color to white. I have reasons for that, so that it will be easy for me to use. So there are some brokers that ask for it. Might just say that you place your trade or using some stuff like just get white. So that's why sometimes you need to use this ask price line majorly. But if you master the art to some pro aspect like that, you don't even need those kind of things. For now, in case you need it, just click this box here in in front of the ask price line. So you click on the button. So after clicking, you see that the line will be there in case you want to place any trade. That the line will be there. The line will be there in case you want the line in your chart. Even if you go to another pair, let's check into another pair. Let's check for USD/APY. You can see the line is there. Good. You can see the line is there. So I don't like those kind of things. Let me just remove it. And get to our thing. So let's say we want to backtest a strategy. So how do you backtest a strategy? Just same way you do it on your system or laptop. That's the same approach you're going to use. And for those that have never used system before, don't even have system or maybe laptop or even big screen idea, you can stay at least start knowing it from here. Let's say there's a very particular structure. I will show you people a structure now that I want to backtest for people to see. Let me show you people the structure. So as you can see this particular structure here, there is something like, maybe if you know what is FVG, and if you never know what is FVG, maybe I'll talk about that in another video. Fair value gaps. So you can see, let me draw it here. The market moved like this on this very structure. Here is the FVG. So the market come back to that fair value gap, acting like it wanted to respect it, but went back up like this. So after that, you know there are some places there that the market took out already. Then it come back again. So that should be the first thing you know, that how did this thing happen. Is this, you can like take your notebook, write that very structure down before you even think of backtesting it. Because I'll be going to the chart now. I won't declare them like taking this stuff to the chart again and will tell you this is right. So like this, it's just like M, but it's not just that. Like you should see something like that looks like M in your chart and mark it randomly, you get bonds. I'm just using this as an example. So after that, you can see, so after price created the stuff like this, then like this. Let's move into what happened next. So as you can see, like I said earlier, it went like this FVGF, they come back to that FVG there. Then there's still something like buy side liquidity, sell side liquidity like that, or those for each like that. I'll still talk about that, but I'm just using this as a typical example. The way they use it here is different from the way I do use it, because here now it seems they use it for higher time frame stuff, but I do use it as confirmation entries on lower time frames. So as you can see, like this, it goes like this, then comes like that. So you are not going to this same thing on your chart. You feel like, where is the entry? It's not even this arrow. Where is that arrow there, just to symbolize where it break at first. So on the process of breaking, there is that there's an FVG here, fair value gaps. For those that know it, and for those that don't know, don't worry yet, we still know it in the next video. So fair value gap. So let's get into what the whole thing that now happened. As you can see, previously say that there's an FVG here, so like this way. So after breaking this very point here, this very point that the market acted like, the very point that respect the first fair value gap here, you know, the first fair value gap there was like respected, so and it failed. So after it failed, it just marked that very point, and when it failed, there should be something responsible for it. It's either breakout block, fair value gap, or that block, and some kind of things like that. But you look for the nearest stuff that is responsible for this kind of things, and the nearest stuff there is that FVG. You see them marking that fair value gap. There, you see them marking. That is what is responsible for that breakout that occur in this particular point. So after the breakout, then the market retested or retraced to that fair value gap, then dropped. You know, I'm teaching you guys two things. I'm here to tell you how to backtest, but before backtesting, I have to know the structure. I'm just using this as an example, and I'm not claiming I'm the one that holds this very structure. but I can claim that I'm the one that knows the approach on smaller time frame, or really know other complex that back it up. But I can't claim that. So to avoid you feeling like I'm maybe stealing other people's strategy, no one does do it. What you see from others might be what you see from me, but we just have different approach. We might have different approach. You might see some people trading other block, supply and demand like that. You might even see me trade, but we have different approach. That's just it. But as long as we are all making money, it's fine. So let's get into the whole thing again. So this is the whole thing now. A whole lot of things. Even before price, we do that on your maybe best area to target in this kind of things. As you can see here, they target the equal lows, liquidity. And those of you that still don't know what liquidity or equal, don't just still worry. We're still gonna talk about it in another video. Something that looks, this market formation of time is majorly looks like W and majorly looks like M. Just that under that W and that M, there are different formations. Some might form this way, some might form. I didn't say maybe because you just see market doing W or just M, I go and enter it, and just then you get bonus and you feel like I'm responsible for your loss or even your profit, or go ahead and talk about it and people will be like abusing me. That who is that person that even tell you about M and W? Some people are ignorant, and some people just settle for less. They stick to what maybe they've learned. They don't go further. I don't say you should go for excess of things like that, because you might end up not even being profitable if you don't know how to utilize them. So as you can see again, coming, it happened. Let's just say it happened this way. Because there's FVG, they have said that earlier. This way goes like this. It break this way, and this was the FVG, the fair value gap, that was responsible. Even if it were to me, I wouldn't be let my stop loss be that time. I just place my stop loss somewhere around this place. If it's on smaller time, my stop loss will be even closer to like 5 p, because I have this very belief that even if they stop point me, I will accept. But it's rare for them to stop on this kind of setup. It's rare for them. Just accept that if they stop on you, or maybe they hit your stop loss, just accept it that way. That I see that is not valid, or just accept it that way, instead of using large stop loss, or at the end of the day you still get bonds. So you can see it dropped. Take out this very place, the retrace point, and after coming back from here, the very point it retraced. Well, that's the first TP. That's your first target point there. You can place your stop loss there. You can place your take profit there. You can close there. No matter how small the profit is, how video is better than none. So you can also target this very point that a whole lot of things started happening. And you can even use to target your areas on higher time frame. You really know how to go about it, because there are some places the market, no matter how genuine your confirmations entries are, they will still liquidate you if you are not careful. So it's rather, maybe sometimes you might decide to set break even. So like setting break even after the market have take this very place out, like you can just set your break even in front of your entry here, or maybe somewhere around after some significant drop. Because there's a time sometimes the market will still come like this, and see if you set break even, take them and still go away. So it's left for you sometimes. Maybe you just risk it and leave it, or maybe you just, let's say you open 4 trade, you might just break even the 2 and leave the 2 to run, and if they hit your stop loss, all is still good. So let's now, you see this right now, we are going to show it out on our chart now. I'm going to teach you how to like recognize it in terms of back testing. So let's go. So guys, we are on the chart now. To avoid confusion, I would say as a beginner, to avoid like talking from my own experiences, maybe I've mastered the art, and maybe you just find it hard to understand. Let's do it this way. Add your show period separators. So after adding that, there's one thing you need to note again. Always know that before you backtest, have that very, maybe you want to backtest on so date. For example, this is from here to this very point here is what happened previously. I don't care the exact time you are seeing this video, because it might be just few months later you are just seeing this video, to avoid being confused by the date. I'm using what is happening currently. So this is what happened at yesterday. I don't need to mention date on this. So from here to here, is what happened on coming is what happened on January 29th. You can see. Also from here to this very point, from this very point to this very point is what happened on January 28th, and like that you can see the one of January 27th, January 20, January 24th, 23, 22, like that. And let's say you want to do a back test of previous day, and there's still another way to approach it on higher time frame. Let's say you want to back test what happened as at yesterday. Let me know if previous stuff, because my bid that it has happened in the past. That how will you maybe at the end of the day you later see this video few months later and it was April. We're not trying to go to like a year chart. It might be very hard, even hard for you. So I'm using something that happened previously, like yesterday. Let's say you want to back test something that happened here, this stuff that happened here. So once you've had the period line separator, let's say you remove the line, don't be confused. There's this stuff I want to explain. Let's say you remove the, you will like see all these things that scattered stuff. You won't even understand. Even if you go to smaller time, like, you'll be confused. But it's better for you to add this stuff so that you will get it very well, clearly seen. So let's say we know that we have to back test on yesterday chart, right? That was on the 29th. So let's do it this way. We are looking for that very stuff we are talking about. As you can see, I'm using this very line here. Let me, in case you didn't have all these things in your charts, you can just click on the plus sign here. That plus sign there, don't mind my drawings. Click on the plus sign here. Add your, let me use horizontal line. Horizontal line. So let me add the horizontal line. Since I cited already something here, so you now go to your 1 minute time frame. And just since it's like something that I wanted to see on 1 minute time frame, depending on the time frame you want to backtest your analysis, or you want to backtest your strategy or model or market structure, I don't know, whatever you call it, or the structure. So on the 29th, you can see the exact stuff we talked about is here. The exact stuff we talked about is here. So what you can see here is that, let's put this phone into a portrait mode. That's another part of the backtesting stuff. So that exact thing that we backtest, you can just screenshot that one, compare it later with this one. I'm not going to go back to that one. The market comes like this. There's even some fair value gaps here. And it comes like this, then like this. You know, it left somewhere here. It came to Reddit, then dropped, then returned. So let's draw this. These are where you're going to be making use of that your tools you use to do your analysis. So you notice the main point that the market came, like the market came around this fair value gap. I don't mind the stop wanted stuff, but at least it came all the way from here, this very point. You can mark this very point out. This is how to backtest on your phone. These are the process. Just follow it closely. Let me check if this line align. Okay, these are the process. So after doing that, you see it came from this way, created a fair value gap along the road, and suddenly get to some side point, it dropped. Who doesn't know we'll be trading fair value gap blind? Like after dropping, as you can see in that example, after dropping, then move again and take that very point out, mark that place again. But for me, you can see my charts are clear. You will hardly even see this kind of things because I don't mark them out. I only mark the reversal point I'm expecting, or maybe the very place I'm expecting the market to do its own thing. So after doing that, you can see after price has taken the very point the market reversed back to respect this FVG, then it still liquidates the sellers that are trying to sell here. It still liquidates it, like it liquidate them. So after liquidate them, this very point here is where you are going to mark out. You can see during the process of the liquidation, there was still a fair value gap there, a FVG. Sorry, I said an FVG, don't mind my pronunciation, it was a mistake. A FVG here, you can see, even if you like stop on there, at least extend FVG there. And one thing maybe I used to tell my students that there are some purposes that price will respect your zone perfectly and dropped. There's some purposes that price will stop on your zone a bit and still drop. There are some points that price will not even come around that your zone and still drop. So don't force trade. Don't like anything that happens, just accept it that way. Don't try to force trade. These are the reasons why if you are trading this kind of thing, just let your stop loss be around some few pips, like around this very point, and let your be because of spread to avoid being wiped out by, so you can just let your stop loss be around there, somewhere like this place. You just let your stop loss be around this very point here, and you are good to go. So let's leave that. As you can see, this was where the price break. You can just mark your, you can just do your market. Let me delete this very first one to avoid confusion. You can just mark that point here where the price broke, like where the price broke after reading this place, broke it. You can just mark that point there, align with that fair value gap. That's just it, and you've gotten a perfect. And besides, since the market even still come back to respect, to take that, you can see this is what I used to say. You can see at least before the market even tried to come back here, it respected this very place, take this very place out first. And even if you have to check again, might even take the external place. This one still doesn't have external targets, but at least the very point it reversed back here to respect that heavy, the market take it out at first. So I think you back some profit there is still good. But if you set your break even here too, at least you will see the market just come like this, take out your break even and still go. But there are some cases the market come this way, you just liquidate all this land and might even keep buying like that. So there are some cases like it's your choice. So that's just another simple of factors. As you can see, the market dropped. It dropped. If we are to let me hide that very place on. Let me hide this very place. Let's go to M30. You can see this is the very place. You can see the date is 29th here, 29th. So I think the market did some drop. This all this drop with what something like 50 pips upward. It's even closer to 50 pips. So let's backtest this very structure again. Let's go to Euro USD. Let's go to Euro USD this time around. Let's go to Euro USD. Barely looking at chart already, I've seen this very thing. So we are backtesting on, note the date, 29th. We are backtesting chart of 29. That was previous chart. So that the reason why I know that I should go to smaller time frame like M5 again and be looking for chart of 28. You'll be confused. You just feel like you didn't see this kind of thing. So let's go. But this seems to be like trickish a bit. Let's dive into M1. This seems to be trickish a bit. You might even not understand. There's not a fair value gap here, but the market do like something. There is a secret fair value gap here that the market reservoir, but try like it stop under it. This is still not a perfect example. Let me look for the perfect example. The way you see me doing, that's the exact way you are going to be backtesting your chart. There's nothing hidden again. I'm coming. Okay, I've seen it. This area, you'll be wondering how I do see this kind of things once you are used to it. So this area here, this area, so you can see, as you can see, market come all the way. Let me see all the way from this place, created the fair value gap here, created the fair value gap along the road. As you can see, it get to this very point and respected it as if it would really respect it. So after respecting it, it took out this very point. This very point, it reversed to respect it. Let me draw it out. These two examples will be okay to avoid this video being too long, because some people might feel this video boring. They won't even know it's a learning video. So after this is the point, it reverses back to respect this FVG here that it has created from this journey, from this very point. So after that, after reversing to respect that, it go back again and take out that very point. It reversed from to respect this FVG. After taking it out, it broke this very point again. This very point that respected this FVG, it broke it. And along when breaking, there is a secret FVG. This one is not even that clear, but there is an FVG here. If you are to refer it to like maybe 30 seconds stuff, or maybe on trading view, but we are not going to do that. But as long as you know this very thing, that this is how it happened, you can see, and at least it come back here. Even if you stop on a bit, that's why I say place your stop loss around some zones here. You just few pips away from your entry. At least it come back, and it was a sweet entry. But you can see from that point, you can see, and it dropped. So it dropped for some while. You can see it dropped. At least you should be the one to know when to take profit or when to exist like that. At least you can see it drop. So that's just it. That's how to backtest your strategy. Let me delete all these stuff. So that's how to backtest. Once you know the very model, just try to find it this way. Go from smaller time frame to another, from smaller time frame to higher time frame. If it's just like check it, maybe even be another page, check it. So that's the way of doing this kind of things like that. You just check it. You might let your phone be in this portrait mode, and you might let your phone be in this landscape mode like this. So from there you refine it, checking it, going for it, marking it out. So it might be even your supply, even your demand. You mark them out like that. Keep backtesting. You master them like that. These are the ways you backtest with your mobile phone. So if you got value from this video, like and subscribe to this YouTube channel. Turn on your notification bell there to avoid missing out from this channel. And don't forget to join my Telegram channel. There are some traders who dropped here, so you can take them. Don't take trades blindly. Like, don't feel like because I do drop accurate trade and just go aggressive all the time. No one is controlling the forex market, because I don't want a situation whereby you come and be meeting me, you lost this or you lost that. I'm just trying to share my own insight from the market. I'm not like telling you it's a must you do this. My free Telegram channel is in the view of this YouTube channel. So thanks for watching.